You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around these here parts, the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Quite a few programs for you guys to choose from, including many, 500 plus. I'll have to go count up what episode number we're on right now, but 500 plus, I know that, episodes of this here program, the option block. And where can you find all that goodness, all that fun? Well, the easiest place is our website, theoptionsinsider.com. Yes, it's not all about the radio here, folks, even though we do a lot of it. 15 programs every day, all week long, except for Saturday and Sunday. Maybe we'll give you some extras on the weekends one of these days, but you get the weekends off there. But yeah, a lot of fun programs for you guys to check out. But also, of course, the website, theoptionsinsider.com. We put up news, articles, analysis, all kinds of fun stuff from the world of options. So if you're intrigued by that, I'm guessing you may be if you're tuning into this, so surf on over to the site. A lot of fun stuff there. Of course, the radio is also available there as well as via iTunes and TuneIn and Stitcher and so on and so forth, including via the ever-fun, ever-expanding Google Play podcast store. Some of you folks on the Android side may be using that one or using our own mobile app, which is, of course, available in iOS and Android and the Fire OS, or perhaps some other podcatcher. I like to actually use, I'm a fan, people ask me all the time, which one do you like? What do you recommend? We use a bunch of different services here, so of course I use our app, but also if I want to use other programs, which we're looking about maybe adding that to ours as well, then of course I like Pocket Cast, one of my favorite ones as well, because it works cross-platform. iOS, Android, web, all the 9 yards. So you can use it desktop and on your mobile device, which is kind of nice. And I like to have my thing synced with me wherever I go. And of course, however you listen, of course I forget to mention all the time, you guys can also tune in live, Mixlr, 3 p.m. Central every Monday and Thursday, 4 p.m. Eastern. And questions, comments, all that sorts of fun stuff can be streamed or asked live right there as well. We love to hear from you guys. You're the reason we do this crazy thing after all. The old option block. And joining me on the program today, beaming in, let's go in order of near-term proximity. So let's start in that paradise on earth known as St. Charles, Illinois, where we're joined by none other than Uncle Mike Tussaw from RCM Wealth Advisors, famed, noted author of Go Long. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a day when the market slides to new all-time highs, if you catch my drift.
You're a fun one to catch today. Sounds like the you're not paying the Skype bill yet again out there in good old the paradise on earth, listeners, except for the fact that they don't have very good Skype connections out there. So we will reconnect with Uncle Mike as we turn our attention now a little bit farther afield, where he has the best connection on the show quite frequently, except for us, obviously, because we're beaming in from the lovely Options Insider Studios. But I often joke with him that he's the only guy using the internet out there in Maine. Therefore, he has all the bandwidth to himself, which is a win for us as we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to Ye Old Program.
Well, you know what? It is a thrill to be back. I'm feeling thrilled actually today. Darn thrilled.
That's saying something, because usually you have umbrage on the program, or you're muting yourself, or you're just generally in bad sorts. So it's good to see that you're excited. The realm of Maine has excited you today.
It has. I just come in here and I just mess up your fine program. I honestly, I think you just have me here because of diversity. You need somebody from a low population state.
Yes, we do.
I believe that is the only.
We have to represent all locales and demographics, and we needed that one listener in Maine, and now we got it. So we're good to go. The Maine contingent is spoken for. So now we can keep on rolling with the show and speak for the market itself. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. You guys probably know the drill. If not, I'll explain it for you. It's, of course, the part of the program where we break down what's moving, what was shaking, what was catching our eye in today's broad market activity. And a lot of things popping off today, a bit of an interesting one there across the board. Uncle Mike kind of referring to it, sliding to new highs. Yeah, Dow hitting an intraday high yet again here today. A lot of things kind of combining to buoy the market north, combo of oil rallying, which still sounds weird to say. Oil rallies, therefore the market rallies, and yet we have seen that play out, particularly with oil at these lower levels. You get to a certain point where it starts to be structurally problematic, particularly to a lot of the financials out there, as well as, of course, to the oil companies and producers themselves. So at a certain point, the market tends to like it, which is an odd thing. But c'est la vie, we saw some of that factoring in. Oil jumping about 5% today after some comments from the Saudis, perhaps finally stepping in to stabilize crude after a year and a half of will they, won't they, and they routinely coming in on the won't they side, perhaps finally deciding, maybe we will step in and do something about crude. It's been here perhaps long enough, or let's at least shore it up a little bit. We also saw some good numbers coming out of a lot of the retailers. It's been retail week out there. Macys rallying hard, even though they announced that they're closing a bunch of stores as well. The street always likes that. Maybe a lot of people, other people not so much, but the street soared the stock was about 18% intraday or so. Kohls also feeling the love, up about 15%. Even Nordstrom, kind of a rising tide lifts all boats, up about 6.5%. Pennies, which doesn't even come out till tomorrow, up about 8%. So yeah, the retailers are just loving this stuff as well. And of course, all of that was combined with yet more data showing the economy perhaps a bit robust. We saw unemployment benefits fell yet again from 266,000, from 269 the week before. So that's the 75th consecutive week for those of you playing at home of coming in below 300,000 people applying for unemployment benefits. So a lot of interesting things there as well. We also saw good old Alibaba, getting a nice lift out there in the market today. A good jump, nearly 60% jump in their quarterly revenue. And of course, Yahoo, which still has that piece, actually, I think it's going to spin off into the Asian subsidiary, but that piece also up about 3%, or nearly actually about 4%. All of that combining for a strong day on the street. Most of the major indices closing up well over half a percentage point. S&P up about 0.6%. The Dow about 0.75 percentage point or so, and the tech-heavy NASDAQ, a bit of the laggard, only about half a percentage point to the upside. And of course, all this upside love saying VIX taking a bit of a rest today. VIX cash at about 1170 or so at the end of the day, off about a third of a handle or so. So a lot of stuff to parse there. Let's perhaps go back out to the realm of St. Charles. Let's see if Uncle Mike has paid his Skype bill. I believe he has. Uncle Mike, are you back with us, sir? And what caught your eye at today's activity?
I like to think I'm with you. Do I sound like I'm with you still?
You sound a little more with it now, I shall say, sir. You took your medication.
Okay. Very good, very good. Well, it's just the paradise of St. Charles. It sometimes gets to you. That just happens.
Yeah, you're looking out your window, you're just seeing all that life has to offer in St. Charles. I can understand why other things would fall by the wayside.
They do. The oil's the big story of the day today, I think, and that XLE is up about just under 1.5%. S&P is up just under 0.5%. So I think XLE is definitely the big story of the day. A couple things that are catching my eye is the fact that gold had a little bit of a pullback. Gold did not rally in a commodity-wide rally. It looks like it was kind of focused a little bit more on oil per se. Alibaba, that was huge today with a 5% move in that stock. It's a good thing for Yahoo and any Alibaba holders out there. But for the most part, it looks to me like there was larger rallies in some and not a lot of movement in others to create the average in the market of that of 0.5% of a rally on the day. So in looking at this, it's not, I wouldn't call this necessarily an across the board rally. It just looks like some star pupils in the bull side of it raise the curve for everybody else. And that's kind of what I'm seeing today.
Thank you for that, Uncle Mike. Let's turn our attention to he of the unshakable connection, unflappable connection out there in the realm of Maine. You know, you build all that fiber to Maine, and Andrew gets all of it because nobody else is on it. But Mr. Rock Lobster, a lot going on today. What caught your eye, and what was lighting it up in the pit chat as well?
You know, that's one of the many great things about Maine. You know, I'm the only one using the technology. It's quite nice. Quite nice. Ultimately, you know, the market has been consuming this this diet of low interest rates and central bank whatever, and they can't get enough of it. So as long as there's more of it, why not keep going higher? I did find the thing with the Saudis saying, okay, they are at near record production and oil rallied. So all of a sudden they're going to stop producing more. I was still confused on the oil rally, maybe just because it needed a rally, so it did, or whatever the reason. But it still looks like everything is, it is almost, you know. And then of course the Dow, the S&P 500, NASDAQ close at records on the same day for the first time since 1999, which was the last super all-time high in the market. So, you know, I guess there's a reason for everybody. You have 1% economic growth. The central banks are kind of tapped. I don't know. Maybe everybody thinks something great's going to happen. Maybe it's the election. You know, Hillary's locked now, I guess, apparently statistically, or so maybe everybody's happy about. I don't know. I'm just right now. I'm at a loss. That's all I can say. What keeps driving the market higher? The old saw about the market climbs a wall of worry, and that's where we are. And I'm just seeing VIX now. It's in the 11 handle. It tried to get out of there yesterday when we were down 0.3% or something like that. And even that got snuffed out. So people want to buy stock now, I guess. You can't buy bonds anymore, so you're going to go buy stocks. It is what it is, and getting in the way of it is probably not a great idea. That's about all I can say for the whole kebab right now.
Yeah, you know, it's one of those things where you know, you could say it with a very very straight face, and you can mean it, and yet the market will continue to rally in your face. And so at a certain point, you have to kind of just maybe shrug your shoulders and roll with it. And the old maxim, if you can't beat them, join them, perhaps applies here. At the very least, maybe don't join them if you're leery of these levels, but at the very least, maybe tip a hat to the ongoing wave of madness that seems to be engulfing the market. Speaking of ongoing waves of madness, let's turn our attention back to what we were talking about on the show, on the program earlier this week on the Monday episode when we were breaking down, getting ready for the big announcement out there in Valiant. That's, of course, ticker symbol VRX. As we mentioned on Monday's show, they were pricing in about a $3 straddle at about 13%. They had earnings before the bell on Tuesday. We had also mentioned how there were write-ups in a bunch of places, including the Journal, saying that it was puts du jour out there, the top 10 option strikes out there. Pretty much 8 of them were puts, and the biggest player in the puts were the front week probably even. I think they have weeklies in Valiant. Yes, so the weeklies, the 15 puts with about 27,000 open on that strike, and we were discussing those bad boys in great detail. And of course, actually that was the regular AUG 15th, not the weekly, so a week beyond, AUG 19th. But they of course had their earnings come out on Tuesday, and it's kind of been a weird and wild ride to watch it since, because of course they They had an interesting run. People pouring into puts ahead of the earnings, of course. We know not all of that is bearish, but certainly a good chunk of it is. People also writing puts out there as well. But anyone buying some premium out there, buying some puts in particular, perhaps not as enthusiastic. The stock took off to the races. It opened about a $1.50 higher, so it was about roughly half of what they had priced in from a straddle. But as the day went on, the rally continued. It closed about $6 higher, so you're talking about 2x that straddle. So a net premium buyer is probably doing all right unless you're a hardcore straight up put buyer and you were specking on that 15 handle coming into play, because this thing rallied pretty hard back up to about the 28 handle throughout the course of the day. Then, of course, fast forward a couple of days till today, the Journal announcing that there's federal prosecutors are investigating the drug maker, and surprise, surprise, most of those gains are gone yet again, back around the 24.5 level to close the day here today, giving up about 10% or nearly $3 on the day. So all that love, all that rallying, all that pretty much mostly wiped out yet again. Still not making those 15 puts any more relevant. So if you're gobbling up those, you might be a little sad. But still interesting stuff. I don't know, Mr. Rock Lobster, does this light up the pit chat at all? It's kind of a lot of Sturm und Drang over there in VRX land.
So basically, I wrote a blog about this 2 days ago because they took the volatility down like incredibly hard after this earnings. Basically, apparently they washed all their dirty laundry and did everything okay. So the earnings weren't great, but they're not going bankrupt. And they took the vol down like in the low 50s. I go, too cheap. So they said, buy puts in stock on a ratio. So that was a subject in the pit chat, and it would have made a little bit of money today. On a long, but it's the story for this company keeps going. It's like one of these things where, how can one of the best hedge fund guy in the world spend $200 for the stock and it's $24? So you'd think somewhere along the lines, somebody's got to be right. Either it's zero or it's worth more money. I remember they bought Bosch and Lomb for more money than the whole company is worth at this point. I think not very long ago. So it's either worth a lot or it's worth nothing because somehow they've managed to create this nutty Ponzi scheme. I have no idea. But I think if the vol gets into the 50s, it's probably some kind of a volatility purchase. Today the vol popped pretty good. And, is there fraud? Who knows? Really, honestly, who knows? The Congress, basically, it seems like every administration decides to not like a company. In the Justice Department, or every couple of years, they don't like a company. At the beginning of after the financial crisis, they had all the hearings. It was Goldman. They didn't like Goldman because, Goldman made too much money selling people stuff during the financial crisis. They don't like these drug companies that just, jack the prices up after they buy a company. It's not that what they're doing is illegal. It's just Congress doesn't like it. It doesn't make it's a bad headline thing. So VRX is going to be in the crossfire for a while. But, as far as a company with assets, if they're not doing a bunch of weird fraudulent stuff, and even if they are, they'll get fined and they'll move on. So but it's a story. So every time, it almost seems like every time it looks really ghastly and sad and ugly, the stock somehow recovers some way. So, but as long as they're under the cloud of a federal investigation, it's probably not going to go anywhere fast. Generally, that holds historically. If you ran some sample of once a company is under, basically, I don't know if they got a Wells letter or what part of the feds are suing them, but generally that stops the company really from going anywhere. So as strange as it sounds, it's probably a better time to sell puts on the thing if you don't think it's going anywhere. But if it's some big fraud, then apparently they restated all their earnings too. So hard to believe, but it is a messy thing, and one way or the other. And I think maybe just better just to trade it, when it gets cheap and everybody has the sadness about it, it's probably a bit of a scoop. And when it rallies on any kind of news, you just unwind the position. I think, at least in the short term, that's about all we're going to get out of it.
Yeah, it's one of those things. Hard to believe. There's fraud and criminal investigations into a cheapy or formerly or close to cheapy. Maybe it's in 20s, isn't that cheap? But cheapy biotech. That's hard to believe that there'd be fraud and investigations in that sector. It's always so clean and so above board out there. Let's just coming up the end here of the trading block. I just want to mention this here because it's kind of interesting. You guys are always talking about. We're always talking about here on the show about the popularity of weeklies. Well, if you're one of the people out there saying, I need more weekly options in my life, gotta have them. Well, then this coming Monday, you'll be a happy camper because that's when the SIBO plans to launch the Monday weeklies in the SPX. So if you're pay attention over there, playing the home game, you got coming up Monday, the Monday weeklies, then of course your Wednesday weeklies and your regular Friday weeklies. So, of course, you can do the math. Tuesday and Thursday, probably not that far off in the distant future. Within a year from now, I would say, if not less, we'll be talking about every day of the week expirations. So get used to it. If you're one of the people out there who's tired of weeklies, well, then I apologize. Don't blame me. I don't keep launching these products. It's the exchanges. But all you guys out there, you love yourself some weeklies. Have at them. There's more coming. Meanwhile, we're going to have at the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the darker, the shadier, the scarier side of the show. If the kids are listening, put the headphones away from them and make them leave the room because scary business afoot here. And the dark side of the options business, yes, it's time for us to explore some unusual activity in some funky names. I'm going to kick things off with a name you guys have probably heard of once or twice. We talk about it a lot. In fact, we read it during the show as you guys are live tweeting at us and asking questions and things. That is, of course, Twitter. Ticker symbol TWTR, closing today $19.78, up about nearly 3/4 of a point, or about 4% on the day. It's the name that does about 92,000 contracts a day, doing nearly 300,000 today. So just lighting it up. About 4.5 to 1 calls over puts out there. In fact, I think it was good old Ofer over there, formerly of LiveVol, who tweeted a chart about Twitter to us as well during the show here, asking if we could talk about it. Well, we had plans to talk about it, so you're in luck. It's a hot one today, lighting it up. You, of course, maybe saw it on the website as well. Listen, by the way, we talk about them on the show here, but of course, you can read all the stuff we're talking about here on theoptionsinsider.com. If you can't make the show or you want to go back and check it out after the fact, that's the mothership for all this fun stuff. And that 4.5 to 1 call to put ratio, that should probably give you some inkling of what caught our eye out here. Yes, it was indeed calls. It was a call fiesta, call palooza, call bonanza, call it what you will. As I scroll all the way down here, they are to September. The September 22 calls, we're lighting it up today. Listeners started off with a block of about 5,000 going up, paper buying for 49 cents. That was over there on the ISE. As the day went on, quite a few more piled in to the tune of nearly 30,000 total on this strike. People gobbling these bad boys up on sweeps across not the ISE and even other exchanges. People just had to get themselves some Twitter upside out there in the June timeframe. Only 6,300 contracts open. So clearly opening paper out there. These calls going out 61 at 63 cents. So clearly a nice little rally today, and all that buying love juicing up the 22 strike. Interesting stuff. Mr. Rock Lobster, this is clearly on the heels of all that recent talk lately that Twitter is in play. Apparently, someone or multiple someones deciding the SEP time frame and the 22 strike is a good place to hang your hat. What's your take on this, Mr. Rock Lobster? People saying Twitter, SEP, 22s, got to have them all day long, got to love them. Interesting stuff. Was this lighting up the pit chat today as well?
We did talk about it a little bit, although I'm kind of Twitter for a while was my what do you guys call it? It was sort of my heartbreak hotel. Although the rally today brought me back to the happy, positive land.
Twitter was your Cisco.
Yes. But the last earnings cycle was very nice to me. So it allowed me to buy tons of stock against some puts when it fell apart, and now we're up here. So I had so many calls for credit, I didn't know what to do with myself. So I no longer, I'm off the Schneid and Twitter, let's put it that way. So in reality, it looks like there's just, stock up, volatility up, call buying. I don't know where it goes. They never like the earnings, even though the earnings don't seem to be bad. I think Twitter mostly has their biggest problem is that I think they pay out too much stock in compensation. But, it doesn't have the great growth that Facebook has. The line about Twitter is the executive team is a clown car that fell into a gold mine. That was the Zuckerberg's kind of funny. So the thing is, it's one of those things where Twitter is so embedded into every web page, in the lexicon of everything. The Olympics, this could be some Olympic hype because, somebody's tweeting this and somebody's tweeting that. It's just, for whatever reason, Twitter has not found the best way to monetize all the eyeballs they had. I just read an article about it that, Twitter might only have 300,000 active users, but almost 300 million, but 800 million people see tweets or quotes of tweets or something like that Twitter has not totally been able to monetize. But again, that's a lot of data looking at a lot of data points looking at all that. So it's one of those things where I think it's a valuable property. How much, I don't know. So since I was wrong early and only was saved by the fact that I am a junkie put juice buyer, it looks like, again, it could be a fit for somebody. Verizon is buying Yahoo, and Google obviously has Android. That's the way they generate dollars. Disney maybe is looking for some sort of other outlet in social media. Disney could be a buyer for Twitter. You never know. So it looks like somebody will probably scoop that property up at some point. But, it's basically been, you've got the speculation it goes to 19 and then it goes right back to 16 or 15 again. But, the company is making money, again, aside from all but they are spending a lot of money on option grants. So it's one of those things where somebody will probably buy it. And I guess the best rumor was Steve Ballmer and the rich Saudi prince, Al Walid, I think, because they already own. I think he was I'm pretty sure he was a pre-IPO owner of it. And it looks like, I think Ballmer bought a bunch in the 30s, and maybe he might try to buy some more, take the company private or something. So obviously those guys have the money to do it if they wanted to. But it's a story. It's another one where I think if the volatility in Twitter gets to the 40s, you want to own it. So, and that's actually been the only playbook that's worked for me so far. But it's just call buying, and they're just buying them. Forget about, people just want it. And we'll see what happens. Maybe Ofer. I know Ofer is he is a Twitter bull, a huge Twitter bull. So we'll see what happens.
Yeah, you're such a diehard juice lover yourself. We have a listener question, I think, later on, Mr. Rock Lobster, that will appeal to you, the diehard juice buyer that you are. In the meantime, though, let's keep on rolling. We can probably talk Twitter all day, and you're right. Twitter's this weird name that, you have to find some way for their mind share to be somehow equivalent to, their market share / revenue, because, they don't make the money, but they certainly have a lot of mind share out there. And how do you monetize that? And I think that's a good analogy, falling into a gold mine, because that's almost exactly what happened with that name. They make it was effectively a way to group text for free, and lo and behold, it becomes what it is today. It's kind of madness. Someone who's we've been on Twitter since before most people really knew what it was, including us. That's why our handle is so cool. If we were just lazy, we didn't want to type Options Insider all the time, and just see what it's become in the wake of that. And it's madness. People don't even put out very often their emails anymore. It's just, we're at Options or whatever on Twitter. And it's kind of funny. This platform has hijacked so much of that. Speaking of hijacking all things, Baba hijacking a lot of the news today. A lot of news coming out today, but Baba was certainly in the headlines a lot today. Like I mentioned earlier, they had a good number coming out this morning, so the stock rallying quite a bit. Closing today, Baba, of course, BABA is a ticker. Closing today, $91.77, up 444, or about 5%. On the day. It's a name that does, on a given day, about 90,000 contracts. Today, lighten it up, as you might expect, to the tune of about 370,000 contracts, about a little over 3-to-1 calls over puts. So once again, our attention being drawn to the call side. In particular, we're going to go beyond AUG, going to go beyond SEP, all the way out to OC. And I said, Baba closing 91.77. We're not talking 90s or even 95s. Or 92 halves, any of that kind of stuff. No. We're talking the OCPAR calls. Yes, the October 100 calls. Someone coming in today, and they just had to have them. And they had to have quite a few of them. Started off with a block of 16,500 going up, paper buying, lifting that offer for $1.02 as the day went on. Pretty much actually a little bit less than 2x that, about just a tick under 30,000 going up on this strike. So paper loving themselves some Babas. These calls closing $1.11 at $1.16. This is all on 5,700 contracts open interest. So a lot of open interest, but certainly not enough to cover this OI. Baba, of course, like we said, been on rally ho mode. This is certainly at the upper end of its recent band. It has flirted with these levels a little bit in the past, about 85.5 here. It's reached a few times in the past, but this level here, 91, 92, is certainly on the rally ho side of the tip. Mr. Rock Lobster, take it away. What do you think about our friend here who thinks the party's just getting started here in Baba?
It's kind of like Tusa says, there's a law of even numbers, 220, 100, 2200 in the SPX, 220 SPY, Apple 700, and, Baba's a stone's throw from 100 again. So it has a couple years of earnings under its belt. It's growing. Surprised that, it is the e-commerce giant in China, so you would think that they would grow if the company was doing okay. So it looks like somebody's like, okay, they're taking October, they're taking the summer, and they're going, that looks like a good time for the thing to trade 100, and we are going to own it. So it feels like, again, the law of big numbers, and that's what they're going for.
Indeed, 100 is a big number. We'll see if Baba can reach it as we keep on rolling up to our final name. This has been a frequent offender on the odd block. It's been a little while, though, I think, since we've talked about this one, but it is timely. Like I said, we had a lot of retail names popping off this week. And when you're talking retail, you also got to talk then the Spider Retail ETF, a.k.a. XRT, closing today, $45.26, up about $1.07, or about almost 2.5%. This is the name that does about 22,000 contracts a day. So one of the lighter volume spiders out there. Certainly no SPY, but it still does decent paper. And today, lighten it up to the tune of 92,000 contracts, about 9-to-1 puts over calls this time. That's where our attention was drawn yet again. Going back a little bit closer to home this time, back in the AUG weeklies. The AUG weeklies expiring on the 26th, to be precise. That's where we found our offender today. It was the AUG 44.45 put spread going up 8,000 times. Looks like paper coming in to buy back the 44s and then sell them out yet again on the 45 strike. There's 11,000 contracts open on that 44 strike. Also 12,000 open on the 42, so maybe he's got a few verticals at play out there. But it seems like if that isn't the case, he is perhaps rolling that 44 part up and out, up not out, but just up to the 45 strike, doing all that for a nice 37 cents in the old pocket, going up in two chunks over there on the ARCA. Again, not surprising, like I said, closing up $1 today, so breaking through the 45 handle, perhaps our friend deciding those 44 is not where he wanted to be anymore, taking them off the table, reestablishing at a meteor strike for a little bit more juice in his pocket. Mr. Rock Lobster, take us home here. What you think about our friend here rolling on the XRT? And also, there is, like, again, some other funky open interest. Maybe these short puts are really just part of a spread, and now he's not even bothering with those 42s anymore. It does seem odd that there is so much open interest out there on just those handful of strikes out there in the Augs.
Yeah, I looked at this and I'm thinking, oh, they're probably rolling this thing up. You know, it's working, so why don't they just keep letting it work? I mean, if Macys can rally $5, everybody thought that. Everybody thought standard retailers were dead because of Amazon, but things weren't as bad, and it rallied pretty hard. So it looks like some kind of bullish retail paper. It was basically it's like the market's at all-time highs, and retail is not even close. So I think they're going for a rising tide will lift all boats, and retail was looking kind of crappy for a while, but I think they just want to take it and roll it. That is my thought about that.
And now it's time for you guys to share your own thoughts with us, because it's Thursday. It means it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. You guys know the drill. It's Thursday. It's time for you guys to hit us up. Questions, comments, insights, hilarity, bone moves, whatever you got to throw at us, we'll take them. Of course, hit us up via the website, theoptionsinsider.com. It's all baked in there, including the website feedback form, or via social media, @Options on Twitter, The Options Insider on Facebook, and Options Insider on StockTwits. It's confusing, I know, but c'est la vie. And, of course, questions at theoptionsinsider.com. If you are so inclined to hit us up the old-fashioned way, if you're streaming via Mixlr, you can also hit us up live via the chat if you have a Mixlr account. If not, hit us up via Twitter or some of the other methodologies out there, and if you get them in quickly, maybe we can even talk about you and your question on the show. Kicking things off, our question of the week is coming to an end here, gents. We asked at the beginning of the week, kind of a timely question. We asked, given all the moves in crude of late, we wanted to know, what is your preferred way to trade crude oil? And we gave them the following choices. We said WTI options or futures. We couldn't really go into all of it because then you only have 4 choices. On Twitter, they limit you. USO options or the ETF, XLE options or the ETF, and Brent options or futures. Let's go to Uncle Mike now, see if the Skype bill has been paid. Uncle Mike, I know which way you want to win. I know you're rooting for XLE, but what do you think is actually winning here on our poll today?
Well, I think for trading, I still think that WTI options and futures are the best way to trade for shorter term. In terms of what I think is winning, I'm going to go with USO.
Interesting. Mr. Rock Lobster, what do you think is winning, and what is your own personal choice?
I think, if I agree with Tucson, though, that's not good. If I agree with
Tucson, you ignorant.
I'm not.
It's intelligence.
I'm not slamming Tucson, but that's not a very he said, she said type of thing. I would say Brent too esoteric, but USO, and actually I like the XLE options now, XLE and XOP. So I would go with XLE because even with crude at this point, I feel like XLEs, they're easier. It's easier risk reversals to put on an XLE with where oil is right now. I don't see tons of risk in those. Doesn't mean there isn't, but so I'm going to say XLE, but there's no way that everybody said that was the easiest. I'm going to say they thought WTI is the easiest to trade.
Interesting. You're right. Brent getting some love. But you're right, Brent. This is just seems it's never really factored into the equation, at least for the U.S. audience. Brent is not where it's at. It's more of the overseas crowd liking themselves some Brent. We're more WTI aficionado. Easy for me to say today, aficionados on the show. But, if you thought that was winning, you are incorrect. It actually was. Uncle Mike was correct. It is USO, just slightly over half of the respondents, 52% coming down on the USO side, even though we've maligned it sometimes on this show, fairly sometimes, perhaps unfairly other times. It is interesting. It is interesting to watch the arb between USO vol and WTI vol, aka OVX and OIV, just because how much they move in lockstep with each other, showing there is a tight, at least a vol arb between the two of those, even if the products don't track each other exactly. And of course, WTI coming in number 2 with about 38%, and then XLE and Brent tying for kind of the also rans with about 5% each. So no love for either of those. Which is kind of interesting. All right, we got a question here from the chat. This is from R. Patel 117. Disney had earnings this week, and he wants us to know: do we think Disney's going to cross 100 this week? Well, we only have pretty much one day left in the week, and this one's probably a bit of an easy one. Maybe you guys will disagree. I don't know, but looking here, close to $97.77. It did briefly flirt close with the 100 handle earlier this week. The highest it got was about 99.25 back on Wednesday before giving pretty much all of that up and more again here yesterday, and then coming in again today, closing down a little bit again today. So I'm going to go out on a crazy limb, guys, here and say no. But maybe, I don't know, maybe Uncle Mike, you're a crazy Disney boy. You think we're going to cross 100 this week?
I'm going to go on your limb as well. I will say no also. We'd have to have a little over a 2% pop on Friday, so odds are we won't, but not saying we won't.
Crazy beans. Mr. Rocklops, I kind of have a feeling how you're going to answer. I'll let you answer a twofer, because I said before that there was a listener mail question. I think that's going to be right up your alley. So I'll give you that one now as well. You're talking about all your juice buying before. We have a question coming in. It came in earlier in the week. I thought it was a good one here because you love buying your juice so much. Good one to read here on the program, Mr. Rocklops. This comes from Matrix. I don't know if he's the Matrix or just Matrix, but Mr. Matrix says, I never sold options before. Why do some people prefer to sell them when they can buy them instead? So I just had to read this one because we don't get a lot of mail in from the juice buyers, the diehard juice lovers. Always the premium sellers out there looking how they can harvest 5 cents more here or there. So I thought it was kind of refreshing to have a juice buyer come in. And who better than you, Mr. Rock Lobster, to weigh in on this? So first off, weigh in for our friend Mr. Patel, who wants to know, I think Disney's going to cross 100 this week, and then you can go on your rant about how tasty and delicious it is to buy free juice.
Disney this week 100, I don't think, but I'm going to say no. Just no, no. Are we going to get that kind of a rally tomorrow? It doesn't. It doesn't look probable, so I will say no. I'll bet you it does before the end of the year, though. The next thing. Why do people sell options? Well, didn't we have a famous person that once said that you either only sell options or you don't sell options? There is no
there is no buy. There is sell or don't sell.
Is it what's his name? I'm trying to remember. I can't believe it.
Good old Don S. He just wrote to me today about something. So yes, good old Don S. Was not a fan of buying any juice.
I cannot disagree with him. I don't disagree with him on that, to be honest. It's just, again, to me, it's always a relative value type of thing. I tend to like buying juice when I think there's a lot of realized vol potential in something. People like selling juice because, a lot of that extrinsic value goes out worthless. So it's like anything, you have to know what you're selling, and you can do it one of two ways. You could say, okay, you're selling juice because the underlying is a vehicle for selling juice, or you actually have an opinion about the underlying and you want to express the opinion by selling your juice. So there's two ways to think about it. So at Option Pit, we are the former way, not necessarily the latter way. So we're just used that the underlying is just a vehicle to trade the options. And but that's not how the rest of the world looks at it. But that might be part of the answer that this particular person is looking for. Sometimes options look relatively expensive in a product, and it's very hard to buy them and even remotely have a shot at making money. So that is, of course, part of the education process, but that's probably for another show.
Underlying. We don't need no stinking underlying here. It's not called the underlying block, after all. Uncle Mike, that's a kind of interesting corollary to this question. I was just thinking about this as Andrew was talking. As you obviously deal with a lot of clients, all spectrums, retail, retirees, et cetera. What percentage, how do you think it breaks down your use case, buying premium versus selling? How often are you buying puts to hedge versus covered calls and other income generation? How do you think it roughly breaks down? And also, what do you have to say to our friend here, the Matrix?
Well, in terms of how I think it would break down, for our self-directed clients, I would say most of them tend to lean more towards the premium selling side. And when they do buy premium, a lot of times it is with a vertical spread or a diagonal spread or something along those lines. For me personally, if I'm working with the underlying, then I'll occasionally be a premium buyer, because if I'm wrong a few times, I have enough money on the sidelines to make up for it a lot of times. But I like to have it financed. I like to have my juice paid for, so to speak. I've heard someone else say that somewhere before. But in if I'm doing a diagonal spread or in my SPY strategy that I talk about on the show, the general thing that I like to have happen, doesn't happen every time, but what I like to have at least theta neutrality at worst. Not to say that we never are long theta, but I like to have it to where time decay isn't hurting me. So in other words, yes, I could buy, let's say, a 6-month call option at the money, let's say. But if I'm selling a weekly against it or a monthly, whatever the case may be, then theoretically, if volatility were to stay the same, then time decay would not hurt me if the market stayed the same and I did absolutely nothing with that position until expiration of the near-term option. So in terms of reasons why you would sell versus buy or buy versus sell, time decay is a tough battle to fight. So I try not to fight it. And on the flip side, being naked short underlying is an even tougher battle to fight. So I like to go somewhere in the middle, but I think it just depends on what you're getting at. For the person who did the 7,500 lot Apple spread last week for a penny, well, I guess he's laughing at us now. I think it expires, tomorrow? But if something is that inexpensive, then I'm not going to be selling it. And I like to look at things from the standpoint to where, well, is it really worth the risk to be selling something? And in that case, I think we all agree that's the dumbest trade of the year that we have seen. But on the flip side, if something's too expensive to buy, then I think the reason that you would sell something is to do something along the lines of a spread. So that is my 2 cents on the 1 cent trade. Ha!
Oh, you are a clever fellow. You just reminded me of our friend out there at Apple who violated all laws of sense and reason. What was he, 112, 113, Mr. Rock Lobster?
I believe so, and he's taking his, $75,000, and he's buying a used Ferrari with it.
He's laughing at us today, isn't he?
He's like,
still
you guys
ticking.
are idiots.
You gotta love the the risk manager or perhaps lack thereof on that trade. Being like, yeah, sure, go for it. That seems like good juice. That penny, gotta get it.
The guy probably's got $50 million in his account, and he just sells, junk like that. So, hey, theoretically, was it a good do? Sure, but it's still a penny.
A penny, no matter how you slice it, is still a penny. Let's wrap up here with this one from, I don't know, Lucas maybe. They write, what are the best resources for the weeklies? It's an interesting question. We have, obviously, Options Insider. We have a lot of stuff on the weeklies. You have to search for it in the search bar. Articles. We have radio shows we've done on them. Options Boot Camp, some on this show as well. So you can search for all that good stuff, and it should come up. The radio, I'm trying to think if the archives of the radio on the page. If you go to the landing page itself, like Options Bootcamp, probably the easiest way to do that is then just do a find on the page because all the show notes are there, and you type weekly in there, and you'll find all the episodes that have it in there. Option block, that'll work as well. iTunes and other places, they limit kind of the back episodes you can go into, and the search is terrible. So it's probably the best way to do it. If you use the main search bar on our page, it's going to search primarily the articles. I don't think it's going to search the show notes on the radio. So you're probably better off going to the page you want. Probably Bootcamp's a good place to start, and this program certainly as well as Options Playbook Radio, another one to check out. And just type weekly into there, and you'll find, or weeklies, and you'll find all the episodes we have detailing with that. Of course, the other places, normal places you would go, the optionseducation.org, they talk about weeklies. Our friends over there at the OIC, as well as, of course, our friends over there at the Options Institute, the SIBO, they have courses on the weeklies as well. Most of their stuff's going to lean towards VIX weeklies and SPX weeklies because those are their babies, those are their products. But if you're okay with that, the end of the day, the underlying analysis, the underlying things we're going to talk about are all the same. A covered call is a covered call, and a weekly as it is in a leap. That's not going to change. The way the option performs will change because we talked about it before. Weeklies are pretty much all theta and all gamma. So talking volatility in a weekly is kind of a bit of a moot point. But so if you're okay with that and you can handle that part of it, or if you want to learn about that part of it, it may be a good place. Those places you can go for free. Mr. Rock Lobster, you guys over there in the land of the pit, you guys have any dedicated resources on all things weeklies?
Funny you should mention that we have a weekly webinar on August 27th.
Craziness.
So,
I honestly, I did not know that. So I just tossed it over to you. Maybe this is one of your pit chatters who wrote in with a timely question. I don't know.
That was the biggest softball ever thrown.
They set you up nicely,
and I took it yard.
I hope you paid that guy his check.
So, and I'll tell you what, I like this listener so much. If he writes in, or anybody writes in on this show that sees the show that wants our weekly webinar, the weekly webinar we're having on August 27th, and mention this show, I will give them another 50% off.
Wow, deals abound.
So you got to write Option Insider Show. It would be a great deal, and normally most of our clients now come through our Saturday classes. They like, oh, wow, you guys actually might know what you're talking about. So maybe we'll take more stuff from you.
It's funny you should mention where you can find information on the weeklies, Mark. I just happened to write a chapter on weeklies in my new book, which is available on Amazon. Go Long, New Option Strategies for Buy and Hold Investors. It's available in the Kindle edition, and it's in the new edition of my book that has been updated on 2016, a whole chapter dedicated just to the weeklies.
And I guess one of you is Lucas, then, masquerading as a listener, because this is such a well-timed question.
It's too soft. It's
Andrew. It's Andrew.
Because he's a Star Wars fan. George Lucas. That's it. That's why it's like that.
The greasy meatball isn't here. I put it on him. But, a well-timed question. I guess we'll just leave it there as we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, ladies and gents, you guys know how it works. This is the final segment of the show, the portion where we tell you what we're keeping an eye on for the rest of this week into the weekend. If you can't get enough of this retail palooza that's been going on this week, don't worry. You got one more tomorrow. You got J.C. Penney. The much maligned subject of several turnaround attempts over there in the land of J.C. Penney. Will they, won't they? We'll find out tomorrow as they report their earnings. Other than that, not a heck of a lot of earnings really left on the horizon coming up. We got some numbers. We had jobless claims today, like I mentioned. Tomorrow we have retail sales and consumer sentiment. All that can maybe continue to feed into this notion that the economy here is robust and strong and apparently completely insulated from everything that's going on around the rest of the world. All right, lots of crazy stuff to keep an eye on. As we head into the weekend, let's start in the realm of St. Charles this time. Mr. Uncle Mike, what you watching for the rest of this week into the weekend, sir?
Never before in the history of the entire stock market has there ever been a better time to sell than right now. So with the new all-time highs with which we have, I am looking at the 2,200 mark on the S&P to see if we can cross through that. Laser focused as always.
There you go, sir. Famous last words. Never been a better time until maybe tomorrow when all of a sudden the Bulls are back in force. And Uncle Mac will be back here saying that on Monday yet again. All right, Mr. Rock Lobster, what are you watching for the rest of this week, sir?
One, if volatility can make those kind of crazy lows, 2006 type lows where we actually got into the 10 handle. It is so ridiculously cheap right now, but it doesn't really want to get off the floor, and the market is very happy with all of this central bank stuff. And you know what? Technology earnings are good. I mean, you got to, it is what it is. So technology earnings are pretty darn good. The Nasdaq's at an all-time high, but the PE is nothing like they were back in the old days. Cisco, Microsoft, even Google is not as big of a growth company. It is not trading at like a 90 PE. I mean, there's Amazon, which is just crazyville, but for the most part, Amazon and Netflix are the things that have super high valuations. But a lot of the semiconductor companies, a lot of that stuff is just, it's not crazy valuation. So this time is different, mostly because the earnings ratios are so much lower. So to be honest, it's not going to surprise me to see at least the Qs, and that was my call earlier in the year. The Qs are going higher. So I don't care what anything else is doing this year, but I think Qs will continue to be the performer. So not going to surprise me to see more and bigger highs for that.
All right, listeners. That music means we've come to the end of yet another epic journey through the world that is the option block. But before we go and sign off for the week here, at least on the option block, more shows coming out tomorrow on the network, but nothing for the option block for the rest of the week. Let's check back in with my cohorts, my partners in time, my well-timed partners in crime, I should say, who have some very timely stuff coming up. We'll start with you, Mr. Rock Lobster. Once again, give us that timely plug on that webinar coming up. I swear this wasn't planned. Our listeners must really just love you guys.
I think they must send me a note at androidoptionpit.com, and I'll get even a better deal than we have on our website for our weekly course on August 27th. And if you don't learn everything you need to learn about weeklies in our course, you can buy Tusaw's book.
You can indeed. And Uncle Mike, where should they go if they want to buy said book?
Why, it's funny you should ask. You could go to Amazon, buy the Kindle edition. Go long, new option strategies for buy and hold investors. And with that, if you are a self-directed trader and you would like to maybe call for advice from time to time, or you'd just like to take advantage of the institutional rates with which RCM enjoys, feel free to contact me. We actually have deals through TD Ameritrade at 35 cents a contract, no ticket charge, or Interactive Brokers at 25 cents per contract plus exchange fees. Feel free to contact me to see if you can trade under our umbrella. Of course, there are some fees involved, but we will discuss that on the phone call. I am at 312-212-3531, or feel free to send me an email at mtosaw@rcmfs.com.
All right, everybody. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and of course, listening live via Mixlr. We love you guys too. We forget about mentioning you all the guys time, but we love you guys too. If you have questions, you know how to hit us up. You don't hit us up just during the show. Hit us up all week. We love your questions, your comments here on the network. And we'll see you next week for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.